rpurham.com and subscribe on all social media platforms at rpurham. Thank you. And don't forget to like, share, and subscribe.
Hey, good day to you all. Welcome to Permanent Associates. I'm your host, Randy Purham. And hey, I hope you all had a fantastic last couple of weeks of not hearing or seeing me because I've been busy on the road doing a lot of things. But nonetheless, I hope you missed me at the same time. So without further ado, we got returning guests with us. We got returning guests today. We got none other than Andreas Sanchez and Tiffani Jones. We're going to get into I ain't gonna say a lot of stuff today, but we're gonna get into some stuff today about nonprofits, business, in regards to like taxes and all of that. I know y'all was like, oh man, we missed the tax series, but it's back, and we're gonna get into like the different structures, how that would benefit you, how it would benefit, your friends, family, loved ones, and whatnot. We're going to educate you so you can go out and educate others. Without further ado, ladies and gentlemen, Andreas Sanchez and Tiffani Jones, how y'all doing? Welcome back. Welcome back. Andreas.
Thank you, Randy.
Tiffani, you're on all the time. Andreas is the one that's been MIA. So we want to hear from Andreas first. Give us an update as to what's been going on.
Absolutely.
Sir.
Things are pretty good. It's summer, so traveling a lot, spending time with family, obviously. Being grateful to be back and sharing some information. Actually, I just came back from a big meeting in San Diego with multiple investment companies. So learned a lot,
Yep.
good stuff, a good economic outlook for the country, so despite all the uncertainty, things on the economic side look strong for the United States.
Yeah. Awesome. Thank you for that update. Tiff, what's been going on in your neck of the woods?
Well, as you all know, Andreas and I are in the same state, different cities, but I always talk about the weather here because it varies. It gets hot, it gets muggy. We're experiencing different things, but most importantly, today, oh my goodness, before I came on the show, I have been looking for a chef to make some really good food here, and I think I have found him.
Ooh.
Okay. So I've had fried chicken and what's the kind of pasta salad. Today I had a chicken salad that was off the chain. So, yeah, I'm always trying to find the best of the best in Nevada here. And this person seems to have done an awesome job. So I almost didn't even come on
hungry.
quite.
I know, you made me hungry. Yeah. Made me hungry. Yeah, exactly. Yeah, no, that's awesome. For me, like I said, I've been on the road the last couple of weeks, just up and down the highways. Been on the state Republican executive committee here, so I got 16 counties that I cover. So just going to different meetings, events, and stuff like that. It's just been like a busy last few weeks, but nonetheless, I'm having fun, having a great time. Meeting and seeing everybody. Great dinners, great lunches, great gas station chicken tenders and energy drinks along the way. But no, it's all good though. It's all good. Like I said, I love it, having fun. But let's jump right into this because. Like I said, there's a lot to cover. I am, for transparency, ladies and gentlemen, was having some technical issues. I can hear you guys now just a little bit better than last time. So I hope it sustains throughout. So I can now hear you just a little bit, just good enough to where I can respond. So, but Andreas, talk to us about the various levels, or not levels, but various types of business structures that are out there. Like you got your nonprofits, for profits, your S corps, C corps, your
Okay.
LLCs, all of that whole umbrella. Tell us about. You give us just a little bit of it, because I'm sure everybody knows what they are, but we're gonna get into like what those different types are, and we're gonna lean into like get into like the profits, nonprofit side of the house more so, like and get into the tax business of it all.
Okay, sure, absolutely. So, I mean, I guess the biggest distinction between for-profit and non-profit is non-profit is non-traditional owners. That's the biggest distinction, right? So, if you're a non-profit, you're a non-traditional owner, like a church, charitable, something that serves the public, and all the proceeds goes back to the public, right? It has the potential of being tax exempt, as you know, right? After it's approved, of course, but also requires a lot of scrutiny, a lot of bookkeeping, right? Very, very good margin and managing of margins because of the timing of the accounting process for nonprofits. Now, the other side, which is a for-profit, right? I mean, there are many different categories, if you want to call it, for those structures, right? I think the most, I'll say the basic, but for those people who want to start a venture on their own business and start your own corporate, and they're the only owner, right? The most basic start is the sole proprietorship, right? It's just one individual, you own your own business, right? Um, the pro is the easiest way to start, right? At the cost is that there's no liability protection in case of some liabilities you might have. Is taxable as on a Schedule C, normal, right? For very small startup companies, it's for something that is very small, right? You're dipping the toes into the ownership world, if you want to call it. From there, you can start getting into more complex or more dependent on the situation, of course, like a
Mm-hmm.
general partnership, right? When you have two or more owners, you have a possibility to do that. He provides some limited protection as well. The pass through is usually through a K1 or a T6 1065 for tax purposes. And it's a simple way to a joint venture to start, right? So let's say Randy and Tiffani want to start a joint venture. The easiest way to do it is through a general partnership, right? From that, then we go more into like limited partnerships. So that's more like real estate on investment ventures, right? Then you want to go into that type of, as a general for limited partners. The liability is going to depend on the is how much most income is 1099 because every earnings that comes through, it just passes to the owners and they're taxed on a higher bracket, obviously. From them, you can have LLPs, right? That's for like attorneys, accountants, professionals, which is like limited liability partnership. So that's for partners. It protects the partners from certain liabilities. That's the main purpose of having an LLP. But it also remains a pass through as well. So it's all taxable. Before I move forward, because I mean, there are so many
Yeah, I
questions.
know, I know. We can only. I can't even say scratch the surface or put a dent in it. We can only just kind of like just stay on the ice,
Right,
just glide
right,
across it a
right.
little
Right.
bit, just to give people something to think about, and they can look at when they're listening to this or watching this, they can go back and say, you know what, okay, I may be interested in a little bit more about learning about this type and whatnot. Talk to us about like I guess you could say um the tax benefit of having like what is more advantageous to a person that is starting off and saying, you know what, I want to be an entrepreneur and I want to have a LLC, for example, or they, because
Okay.
some people like to conflate a nonprofit. They think just because they have a nonprofit that they have a LLC, and or vice
Yeah,
versa.
that
They
is a
think that they
common,
have a
right. That's a common thing. People, and I was told by my accountant that if I had the LLC, that I should look into a nonprofit because the LLC goes with the nonprofit. So you might as well combine the two. I
combine
mean,
them, right?
which I'm looking into, but I don't know what the actual benefit of that is
Yeah.
at the
Yeah,
early
like
start of it.
now when you add in a nonprofit, whether if you have a LLC, right, or a C corp, I don't know, nonprofit is a different layer that you add through, but it has the potential of being tax exempt, but you are subject to high scrutiny, right? Because technically speaking, you're doing things and you keeping nothing. You run a business for nonprofit. So how you living? Let's start with that, right?
Right,
So everything goes
right,
to charity, everything goes to public purpose organizations, and the setup it's is forgiven. So let's say if I have a company, right, and I have excess of income that I'm gonna be taxed. If I set up a nonprofit, right, I can use that vehicle to give out. So from the
Hmm.
corporate structure, I'm giving up money with purpose, right? I'm paying less taxes. Instead of giving it to Uncle Sam, I'm using a vehicle to do things or meaningful things in life. I'm
Right.
not looking to create income or nothing like that. It's just because I already have excess of income. Right.
Yeah.
So that's number one. Now, if somebody just starting a business and they're just doing a nonprofit for fun, I get it. If they're doing a nonprofit for business, well, and you just starting, so what's the purpose? Right?
So
Does that
so
make
right.
sense?
on those lines there, along those lines there, you would start a
Mhm.
nonprofit for the purpose of making a salary, but the organization itself is well, the whole organization is a LLC. So you as a CEO will have an LLC. So in case somebody decides to come along and sue, you're detached from that liability, but you're still making money off of the company because of the donations and people giving money to it and all that. So you're making a salary from it, but the output is it could be whatever consulting, it could be giving diapers to babies,
Yeah.
walking down the street type of thing. Is that construct legal or is it swimming in murky waters?
Yeah, you are murky waters. Because the whole purpose of a nonprofit, right, is for charitable, is for charity,
Charity, yep.
right? Or public purpose organizations, right? Organizations that
Gotcha.
are committed to give to the public. Uh, on the corporate world, when corporates have excess of income, right, and they wanna
Mm-hmm.
do good stuff. I mean, I'm just gonna give a very simple example right now. I don't know if you guys know, but in South America, there was a very impactful earthquake in
Hmm.
Colombia, right?
Mm-hmm.
So
Yep.
now they're getting some help and assistance. Um, so McDonald's, right? McDonald's right now are providing food for the rescue workers that they're flying from different parts of the country, the world, to help out, right? They're doing it through the McDonald's Foundation. So excess of the corporate earnings that they have it allocated on the McDonald's Foundation, right, is to give out. So the McDonald's Foundation is not in to make money, is to do good things for the community when things like now approaches. So the McDonald's Foundation in this case is not making money. It's just putting out supplies, right? They're gonna probably deducting the expenses and the food and things like that. They're gonna be deducting that on their side, but they're not making money out of it. McDonald's Corporation is making money out of it, but on their regular activities of business. Does that make sense?
Yes. Yep.
Okay.
Yes.
Now, sometimes when a nonprofit grows or is managed, right, it needs employees, right? So, yeah, some of that cost gets to offset employees, but those employees have to be paid. Um, it has to be reasonable, right? It has to be very frugal because the purpose of the nonprofit is to give to charity, right? Not to enrich themselves. And that's when you start seeing that murky water that you were talking about, that
Hey, you
people
need to
use
come
it
down
with the
to
wrong intent,
Hey, you need to come down
right?
to Austin. Man, it's all kind of nonprofits down here. Let me back
I
up.
hear you.
Nonprofits, and
Correct,
the whole
correct.
staff is making like six figures. It's like,
Yeah, that's
what
and
are you
that's a
doing?
And
sad thing,
yeah,
That's
that
the
is a
sad part
sad
because
thing.
it's created with good purpose, with good intention, right? But there is always someone somewhere that they just trying to, you know, we want to call it cheat the system, but finding
Scam.
shortcuts, and then he just kills the credibility of something that is supposed to be for a good cause
Yeah,
per se.
Yeah.
Tiff.
Well, you know what? I have seen when I was more involved in California. Right now, I'm in between Nevada and California, but I used to sit on a lot of boards. And you'd be surprised at how people structure why they have a nonprofit. And like you guys are saying, many people have nonprofits and not for a purpose to serve anyone else. I mean, you have everyone on your board of as a family member, everyone on your board, I should say, is a family member. So now everybody's collecting a salary. And at the end of the day, are you really serving the purpose of giving to the community? And in essence, a lot of people aren't. Like you said, Randy, that people are just getting these nonprofit IDs, identification numbers, just to have it so that they can do what they will at any given time. Let's set up our family to have a non-profit. You're successful when you don't have all your family as members, first of all, and sitting on the board. And if you are doing it for the purpose to help the community or help people at large. And I do believe strongly that people should do that. And again, like you're seeing it in Austin, I've seen it a lot of times in California, and I'm like, well, how does this happen? And churches do it all the time too. There's a bunch of churches in California, and they all have nonprofits. And
Right.
if it's not structured
Well,
well, it won't do well.
correct. Well, churches should be non-profit.
Yeah, they are.
That right. That's how they should
But
set up because.
how about the
Go ahead.
community? But see, here's the thing: you have to have a community development corporation, a CDC, attached, or you should have one, in my estimation, attached to a nonprofit. Now, I've seen that, and I've seen the success of that in bigger organizations, bigger church organizations.
Mhm.
The smaller ones, I haven't really seen that. It's hard to get that designation at CDC. So,
Yeah.
Yeah. So it requires, like, at the end that you have to be very diligent, right? Very transparent
mhm.
with the information, with the bookkeeping and things like that. Again, it has a purpose. It's on the tax code for the nonprofits. It's for a purpose, right? And the purpose is the purpose of giving, right? And it has the tax benefits because it's about giving. And I'm a firm believer. The American people are the most giving in the world. Like, we give out
Oh, I
so
mean, yeah,
much.
I think,
Right? It's a
yeah,
culture
we
of
are.
giving.
So much so we need to stop right now.
Yeah,
I'm
yeah,
just
yeah,
saying
yeah,
we need,
sis,
we're,
you're right, Tiff. We are a very, very benevolent country. Even as down to the individual person, we are a very benevolent people. And when you look at it from a macro scale, you look at it from a macro scale of compared to other countries, you have people that live on literally a few $100s a month, and we live
yeah.
on thousands a month or even thousands a day, depending on your lifestyle, right? And we just throw money away like it's popcorn, or the kernels of popcorn,
Exactly.
at a movie theater. We just throw it out there with no thought behind it. But if you translate the amount of waste that an individual person does in the United States with money, and you transfer that difference to a person in another country that makes only a couple $100 a month, you will see a difference in not only their lifestyle, but the way they become benevolent. They be like, man, I was missing out on so much that I now want to just give to somebody else and make them feel like how I feel right now because somebody did this for me. Now, doing all of that, here's the kicker.
No, I get all that, Randy. I get that. But I'm just listening to the conversations of the people here in this country who are struggling to afford their necessities, but feel that they should also give, which there's nothing wrong with that. That's another conversation. But I'm just saying, I don't mind charitable giving. I don't mind that. And I think that we United States does give very nicely to other countries. But since we're having problems.
Yeah, no, I got that. But what I'm getting at is, well, I was going to turn, because this is for Andreas.
Oh, okay.
If a person is doing, they say, hey, I'm going to start a nonprofit for the purpose of tax, as a tax benefit, and they say, okay, my disposable income, I'm going to give away to the unfortunate around the world type of thing. Just write them a check and, boom. And I'm going to write that off of my taxes. And it's a business expense on top of that. So I can multiply my expenditures through the form of the U.S. tax code. Can somebody get away with that?
Yeah, they can. Correct.
It's criminal, folks. This is why I say we need to abolish the income tax system, because
you're on the income.
There are people that's doing it. That's why I asked that question the way I asked it, because there are people that are doing that, and this is how they get away with bamboozling the system. And it's crazy. Like I said, come to Austin, Texas. You see all kinds of crazy stuff.
But see, you can't hate the system. You can't hate the game. You might hate the player, but
yeah,
it's a flaw.
But think about this. I mean, it just, everything has to be based on perspective, right? So when we see things from the perspective of a scarcity, right? They're like, okay, I don't have, right? I have to protect. On the perspective of abundance is the ability to give because we can. Not everybody can.
Right.
But for those who can, right? And they're fortunate to do that. If the tax law empowered that as well, right? Given a vehicle to entice that giving because they can, why not? It's even better, right? So it depends how we see it.
Yeah. So how about, Andreas, those who, let's say on an individual basis, you give, right? You at the end of the tax season, at end of the year, whenever you do your taxes, you set aside money for donations, right? And that's good. But there is a cap, because you have to itemize that stuff too to get the most benefit. So let's say an individual doesn't have it all itemized. I mean, there is a cap, right? That they can say, here are all my donations. This is what I've done. Is that correct? Otherwise, you have to itemize it, right?
Yeah, I mean, you have to, I said, you have to use diligence. Like I donate, right? And I have my itemization of what I give, because it's just, it's the right thing to do, right? It's the righteous thing, right? So it's what it is, right? I'm not putting more, I'm not putting less. It's just what it is. Mm-hmm. Did that make sense?
Yeah.
And the QDCs, like charitable QDCs, right? QDCs are people who have excess income when they can donate their income, or they can donate some of their assets on a yearly basis. They have like an extreme of expenses, and that doesn't count towards their income. So it's a good way, for example, of an individual, a high net worth individual that doesn't have a nonprofit organization and things like that, but he has excess of income and he set up a QDC. He can give to that QDC, offset his taxes, and do a good purpose for that. Now he cannot set up a QDC
Right.
and give it to his family. That's not a QDC. It has to be an organization, right? It's not a QDC like I'm gonna give it
Right
to
now,
my kids. No, it doesn't work that way.
right now, can you tell us what a QVC is for those who may not know what QVC is? What's the definition of
Q-
QVC?
Qualified charitable. I'm sorry, QCDs. Qualified charitable distributions.
Oh, QDC. Okay,
Qualified
QCD. Okay.
charitable distribution. QCDs. I'm sorry.
Good deal. Now, you said something that was key there. The being charitable, and it translates to it can be a business. It can translate to a loss to a person because the government's going to say like, "Hey, you got all this money you can give away. You owe more in taxes."
Correct. So it killed the
Talk-
enticement, right?
Yeah, talk to us about that.
Okay. Like why charitable?
Yeah, like being like if you're like I'm gonna say overly charitable, but like you said with tithes with the church, you're giving so much money to the church, and you're expecting to get that back or able to write it off as a difference in your own tax income, your taxable income.
Correct.
It goes against you. It can go against you. It just depends on how you do it and whatnot. Talk to us about the downside of that, because I mean the upside is that you're giving to a church and you're doing the biblical thing of 10% of your income and all that. But there is a
Right.
downside if you do too much of it. So talk to us about that and how that could hurt a person.
The downside that you give too much.
Well, I think the whole purpose.
it's like spending. You're spending
of
more
the-
than you're earning, so it's bad, right? Financially,
right.
personal
Well,
financial,
but
right?
see,
Yeah.
Well,
right.
otherwise I
But
don't see the
people
bad
think
side.
that. Yeah, but
Go ahead.
people think the more that they spend, the more they can deduct from their taxes, right? So let's say,
Up to certain
maybe it works
levels and
better
certain
in
cases.
business. Mm-hmm.
Yeah. It's
So maybe it
certain
works
level
better
and
in
certain
business.
cases.
Yeah,
Correct.
but a lot of people
Because
think that way.
business are required to itemize, do their bookkeeping, right? It's an enterprise, right? It's cash flow that comes in and income and liabilities, right? When it's a little bit more complex. Um, somebody just finding their own personal income and doing all these things is not the same, right? You
Right,
cannot have itemized
exactly.
deductions on a W-2. If you're an employee getting a W-2, you can have all those itemized deductions that we're talking about. That goes out the window, right? That doesn't exist. Now, charity, yeah, you can give to charity, yeah, out of W-2s, yes. But all that has to happen on those deductions and expenses when you have a 1099. Remember that,
Yes.
because you're getting paid gross.
Okay. So it's beneficial in this case when you have a 1099 or you have some kind of corporate benefit like an LLC or something to counteract that. But on an individual basis,
LLC is just a 1099. LLC is just a 1099, right? Which means that there is no taxes being withheld at all, right? So you're gonna have your income and you're gonna have your itemized expenses. Obviously, the tax law changed a little bit, and MAGI and AGI changed. Like I just gonna say, income, those things changed this year. I don't want to get in detail with that because that gets like there's another two classes.
Yes.
Right? The idea is that when you have an LLC, it's just a limited liability company. It's just limited your liabilities. So let's say you open JoJo's ice cream shop, right?
Yeah.
Somebody gets intoxicated with your ice cream and passed out or die, and now they want to sue you. If you don't have a limited liability company, and let's say you have your own home and you might have you inherit your grandma's house, now you have two properties, if they sue you, the lawyer is going to go only not for your ice cream shop. It's going to go for everything that you have, bank accounts and the properties included. Having an LLC on that ice cream, it just protects their liability. It limits their liability only to the ice cream assets. So if that person individual die with that ice cream and the lawyer comes to sue you, technically speaking, what they can sue is, what they can try to get is anything that is within the liability company. In this case, is the ice cream shop, materials, accounts, everything that is there. That's why it's very, very common mistake. You have to keep everything separated. People pay to the liability
Yeah.
company and they send it to their personal checkbook. Nope. Because then you open in windows to like go after your assets, right? So it has to be
Yes.
very structured, very clean. So that's the purpose of a LLC. Now, withholding taxes, so you're getting paid everything. You have to itemize your deductions and things like that. And from there, and just move it to your personal income.
Right.
So that's the
Now,
purpose of the LLC.
now, when do you move in your business from an LLC to maybe an S corp? When do you move your
When
business?
you
Is
when
it
you want,
advantageous to start it like that, or to do the LLC and then move into an S corp, or start at S corp level?
yeah, depends on your income's projections. The big benefit of having an S corp is that tax purposes. Okay, let me explain that. So LLC is a pass through, right? But the other one, the S corp has it through payroll. So technically speaking, when you are an LLC and it's 1099, your your income, you're paying tax on a 15.3, 15.5% rate. When you're on the S corp, it's half of that because the corporation is paying the other half of your taxes. So you're able to put some of that income and pass it through W-2, and some of the bonus or excess, you can pass it through 1099, like a member compensation. So you can break down the
Okay,
income
so
in W-2 compensation and pass through profits. That's the big difference with the S corp tax election.
okay, so it's kind of safe to say, in my estimation, that is, that it's better to start at an LLC level, right, and then gradually, when you employ people, I would say, because it's W-2, that's means employment, and then gradually going into that. And I, from my understanding, when I talked to an accountant here, they said after 2 years, your LLC automatically rolls into an S corp. So like it
I'm
doesn't,
not.
your
I'm not
LLC doesn't stay
sure.
on the
I'm not
book.
sure if the S. I don't. I'm not. I don't know. I'm not. I'm not sure about that
Right.
because
Okay.
you have to establish the S corp. You can have an LLC for many years. It will remain an LLC, right? But you can
Right.
establish an S corp at any given point. That you can, but it
So,
doesn't automatically become an S corp. It doesn't. You have to follow
oh,
that.
okay. So they're, oh, okay. So they're two separate entities. An LLC is
Correct.
one, and then an S corp is another. Okay.
Right. So think about this is your LLC right here, right? And you set up the S corp down below. So the LLC, you just pass it through income, limiting the liability. That's all it does. And it goes to the C corp, and through the C corp, is just restructure how you want to be the tax liability, the tax. So I'm gonna put portion of this into W-2, which I get in tax, and it's gonna be my tax. It's a lower tax because it's gonna be around 7.3, 7.4, right, percent. Oh no, I'm sorry, 7.5, 7.6. So I'm limiting my tax bill. And the other one is just the profits, which those profits, if there is any after my itemized deductions, correct, there would be 1099.
Great.
That's the bigger difference. Then the next level is C Corp, right? C corporations. It's a separate taxpayer. The biggest thing is like when a C Corp, the institution can retain earnings. On a S Corp, it doesn't. Everything has to be distributed. They don't keep earnings per se, right? Now, you can accumulate shares. You can have shareholders as well. Well, on the S Corp, you have members, right? So the C corp files his own personal tax return, right? We also pay taxes on a corporate tax level, which is way higher. It's way higher. What else? You can get dividend taxations if you get
Okay.
paying through stocks or outside capital. It's more complex. It's more
Yep.
complex. Can you hear us or not?
Yeah, I can hear
Can you
you.
hear
No,
me?
my mic was off,
Okay.
but I was
Oh, okay.
co-signing on what you were saying as far as C corp is paying way more taxes, and it's different tax avenues. So you have your payroll taxes, your investment taxes, and everything else that they're sharing. It's kind of almost like a profit sharing with the government in terms of like
Yeah.
paying all these
Correct.
different buckets of taxes. So
Exactly.
an
So think about
individual, yeah, go ahead.
uh you think about like when you're trying to go and raise capital outside, right? You go into the public to try to raise capital. You want to have a C corp. That's how you attract that outside
Hmm.
investment because then you're willing to give them part of ownership, right? Now,
Mm.
if you look at the economics in the last more than 10 years, around it's like 65 to 80% of
Hmm.
companies out there remain private. They're not going to the public. Big shift.
Mm.
Because when you are private, you still remain, you can keep up to 80% of your profits. When you're public, you have to give your profits back to the public,
Yep.
right?
Right.
It's one of the things. So they rather build higher valuations and keep it private and keep it in control on those earnings and profits to reinvest into the company and continue to have massive growth.
Makes sense. You know,
Yeah.
I had a friend some years back now, and he was getting into the space of creating sole proprietorships, and then he was
Hmm.
gonna roll them up onto a S corp and make
Okay.
them all LLCs and all that kind of stuff, so he could be detached from it personally and all that kind of stuff. Is there a financial benefit to having multiple sole proprietorships, even if it's just a one line item product that you're pushing or service? Is there a benefit to doing that, or should you just have one one business and you're doing everything through that umbrella?
That's a good question.
That's a good question. So it depends on what is the liability.
Okay,
It's based on the liability,
got you.
right?
Yes.
So if there is no liability, like for example, let's say uh, I got nothing, right? I have a lot of dreams. I want to start an ice cream company. I want to open a shop for candy. I want to open a shop for a mechanic. So I go and open three different businesses,
Mm-hmm.
right? So that have nothing to do with each other, right? Right now they don't have value because the only value is what my work or maybe, right? Or maybe the
Right.
material that I buy. Okay.
Mhm.
Yes, you can do that, but it's not. Is the cheapest way to file something as a proprietorship.
Yeah.
And the reason for that is because it's a 1099 business. So it's you gain the money gross, right? Is the easiest way.
Makes
Then
sense.
from there you have liability, you have homes. Let's say, for example, people who buy properties, right? And they have rental properties. Like if you have 10 homes, you have a big liability if you don't have LLCs in them. The reason for that is because somebody
Right.
falls on the in house number one, right?
Mm-hmm.
That lawyer can come and they can sue you for all homes combined,
Yep.
even though one was the one who committed. He was distressed per se, right? He was eligible for that lawsuit. So
Got
it's LLC's limited liability. It says, right? You just reducing the liability. So
you.
some
Mm-hmm.
people do real estate. Some of them just have like one LLC per home. So they just limit the liability per household. So they know they control. Some of them they group them out. They say, okay, I will have 10 houses here in one LLC and 10 houses here in another LLC. You know, it, or they own an apartment complex. I have an LLC for one multi-unit, things like that. So it's a good thing to do that. Or let's say you have real estate and you on the side have a practice of you're a doctor. Well, you want to have your LLC for your practice for doctor because something happens. The last thing that you want is then trying to go and get all your properties.
Gotcha.
That's how you shelter those assets.
Good deal. Good deal.
So liability protection, and then the second part is how the tax structure works, right? Based on the needs.
Yeah. Yeah. Absolutely. Yeah. Tiff?
No, I think that's a great explanation, to be very honest. And, because I've been looking into it coming into Nevada and what goes on in, like how this works in Nevada. And I think some of the stuff that you said has been really great in order to make those decisions. Because you really don't know. Yes, a lot of people start as sole proprietorships. And if you talk to any accountant, or most accountants will advise you to do that for tax purposes. Because if you don't have your business totally together and you're trying to decide whether or not the idea is going to make money, an accountant could advise, I would suggest that you do it this way because it's less money and it's the taxes. So in that case, we understand. But when, like Andreas was saying, when you have a company that is a product company that, like an ice cream shop, that you have to deal with the liability, then an LLC is great. And I think that, going forward, a lot of people push LLCs, and I think that's great. But then again, there's that payment, that fee at the end of the day that you have to give. You have to pay. You have to pay $800 or whatever that fee is at the end for your taxes. So some accountants might say, to avoid the tax issue, do the sole proprietorship first and see how your business grows, and then, do the LLC. But like Andrea said, I think it's according to the type of business.
Yeah. No, absolutely. Not only through the types, but through whether or not it's going to be beneficial to you as an entity, as a person too. So that's why you have the different types. You have the LLC versus sole proprietorship, or LLC, sole proprietorship, or even just regular, like, hey, I'm just a for-profit company that's making money and leave me alone. Pay my taxes when I pay my taxes, type of thing. So, but we lost Andreas. I don't know where he went. He's like,
I know he did say he had a tight schedule, so I'm not sure if he is going to deal with something and come back. We might see, him return in a couple minutes. If not, then I guess we might just continue on our own and wrap it up.
Yeah, I was going to say, we can go ahead and wrap up, and we'll just call him afterwards and let him know. There he is.
Oh, there he is.
I was just going to say,
I don't know why it went blank. I could hear you guys, but you guys cannot see me or anything. So.
Oh yeah, okay.
Right.
Yeah,
we
on my end.
Yeah, we're like, yeah. So we didn't know. I know, Andrea, you had mentioned you had a tight schedule today, so I was like, well, maybe he had to go into a meeting and.
No, it's good. I already finished the meeting. So it's funny you were talking about that because my previous client that I was talking to, they own a business. This started like 4 or 5 years ago, and they set up the business as C corp. So now they realize 4 years later they're paying so much taxes. Now they're making this switch back to an S corp. The business wasn't there yet to sustain so much tax. I'm like, well, do you have shareholders? Like, no. I'm like, why are you paying all these taxes? Right. So, it's important to have the right person or the right professional in your corner, and get the right guidance. Like, for example, for us that we do financial planning, speaking big part. Right? It's guiding people through the process.
Yeah.
And I love it because I personally have called you, Andreas, to ask you a couple questions about structuring a company here and what I should do. And your advice and your expertise, as you have guided me, is phenomenal. Because I've talked to my accountants and I have a couple accountants and they tell me one thing, and then I have a financial advisor. They might direct me in, differently. But I can always say that your what you give, your advice, your expertise is always consistent. It's great. So I appreciate that I can pick up the phone and call.
You're welcome. Absolutely.
James, tell everybody how they can follow you and support you, sir.
Oh, absolutely. They can go to goldenshieldfinancial.com, our website, and also Golden Shield Financial. It's on Facebook. We're on Facebook, YouTube, and Instagram as well. Our office number is 702-825-3600. We help only locally, but we are actually nationwide. So we have clients in different areas of California, Florida, New York, Texas. I have a lot of clients in Texas. So
Yeah.
Oh, wow. See? Perfect. So all those listening in Texas now, you know where to go to get some great financial advice. And I can personally endorse that and vouch for Andreas's company. I've, to be able to talk to somebody who has the expertise that he has and who's honest and will not guide you down a road that you shouldn't, but really point out everything and lay it all out for you to make the decision that best fits you. So we didn't even know that. So that's a great thing, that you also have a lot of clients in Texas.
Yes.
yeah, no. Thank you for that.
And I did want to ask you another question, and that was, wait a minute. I'm not trying to have a senior moment, although I am in a senior complex and have been around a lot of seniors lately. I'm not trying to have a senior moment, but
That's funny.
it's great. It's great though. And I still, it'll come to me. And then as we speak and continue the conversation, I'm sure it will come.
Yeah, we're gonna pick back up again at another time. We're gonna get a little bit. Like I said, we're gonna peel back the onions, as we go. And just today we're just scratching the surface a little bit, getting people to think about what it is that they may want to get into or may want to get out of. Like you just said to your point earlier, having a C corps and then saying, what, nah, hell no, let me just drop down to the S corps. People may want to do that. They may want to go from being a for-profit to a non-profit, so we can talk about, lateral movements like that next time around. So thank you for being here.
I know. I know what it was.
Okay.
Does your company handle trust funds or different that category where you can set someone up in a living trust and I'm trying to say I'm like getting touched.
So we work with estate planners. Yeah, we work with estate plan attorneys to set up those. We actually don't do it because it should be done through a JD attorney, right? When they're established, right, we help them fund it and administer the fund on the trust if it's necessary. It's very typical, for example, with high net worth clients when they have multiple things, like they need to do an ILET or like a dynasty trust. We don't create them. We guide. The attorney will build it, set it up, and we manage the funds and what is inside, and also strategies that they use as well. So similar is, for example, with special needs trust, children that they might need their handicap, right, or they need some assistance, and they are receiving a state assistance like Medicaid. So special needs trust is something that allows them to keep receiving state assistance and having assets or income from family members without jeopardizing their qualifications for welfare.
I didn't actually know that there was a special. It was a special needs trust, is what you said. I think that's what you said, but I didn't know. I didn't even know that existed. So
yeah,
good deal.
So that's interesting too. So like you said, Randy, we're just pulling back the layers of the onion.
Yes. I was just gonna say,
That's
ladies
true.
and gentlemen, we're just peeling back the onions, because there's plenty of onions out there to peel back. But we're just peeling back one onion today, and we're gonna get into getting, like I said, this is gonna turn into a deep dive here. So make sure y'all come back, and we'll get into it, folks. And with that being said, thank you all for being here today, and we will catch you
Absolutely, Randy.
next week or so.
See you.
Thank you.
Yeah, absolutely. Ladies and gentlemen, Tiffani Jones and Andreas Sanchez.
Today's program. You can
Wrong
follow,
screen.
like, share, subscribe.
Tiffani Jones and Andreas Sanchez talking to us about, different types of companies. I just put it like that, because there's different types of organizations, companies, different types of structures. Let me put that. That's the word I was looking for. Different types of structures that you could have in your life, or with partners, with friends, with other family members, what have you, to not only shelter your money, but to shelter yourself and protect yourself from those liabilities in association with having said companies. So, like I said, we're just peeling back the onion. We're just getting started on this. So, y'all stick around, stay tuned. We'll be back again either next week or the week after and get more into it. And take care. God bless. Be safe. I got to get on the road. And I'll holler at y'all later on. Ciao, ciao.
I hope you enjoyed today's program. You can follow, like, share, subscribe on Spotify, Substack, Rumble, YouTube, Facebook, and your news. And also, you can download Let the Truth Be Told app on your favorite streaming platforms, such as Fire Stick, Apple TV, and Roku. Take care. God bless.